What if a single company could redefine an entire industry, upend traditional business models, and become a titan on Wall Street all at once? Netflix, the streaming giant, did just that. But its journey from a struggling DVD rental service to a stock market phenomenon is more than just a tale of innovation. It's a story of bold risks, strategic pivots, and a relentless drive to stay ahead of the curve. How did Netflix not only reshape entertainment but also become a darling of Wall Street? And what can its journey teach us about the future of business and finance? Let's rewind in 1997. Netflix was born as a mail-order DVD rental company. Its founders, Reed Hastings and Mark Randolph, believed in a simple idea: convenience. But in the late 90s, Blockbuster dominated the video rental industry, and Netflix's subscription model seemed like a niche experiment at best. Investors were skeptical, and the company faced a massive uphill battle. A turning point came in the year 2000. Netflix, struggling to stay afloat, offered to sell itself to Blockbuster for $50 million. The executives at Blockbuster famously laughed them out of the room. Little did they know, this single dismissal would mark the beginning of their own downfall and the start of Netflix as meteoric rise. It's one of the biggest what-if moments in modern business history. 2 years later, in 2002, Netflix went public at just $15 per share, raising $82.5 million. At the time, it was still primarily a DVD rental company, but Reed Hastings had a much grander vision. He foresaw the incredible potential of streaming delivering entertainment directly to consumers over the internet. The technology wasn't quite there yet, but Hastings was already laying the groundwork for the future. By 2007, that future had arrived. This wasn't just a small pivot. The company's decision to prioritize streaming over its successful DVD business was incredibly bold, and it came at a huge cost. Transitioning to streaming required massive investments in technology and expensive content licensing deals. For years, Netflix operated at a loss, but Hastings' belief in the future of streaming never wavered. He was playing the long game. In its early days as a public company, Netflix faced relentless skepticism from Wall Street. Critics questioned its ability to compete with established media giants and doubted whether streaming could ever be profitable. Netflix's stock was notoriously volatile, and many analysts were outright bearish. The street just couldn't see the vision. Netflix released House of Cards, its very first original series. It proved that Netflix could not only distribute content, but also create it at a level that rivaled the best television networks. This marked the beginning of its transformation from a tech distributor into a full-fledged entertainment powerhouse, and Wall Street finally took notice. Investors started to see it as more than just a tech company. It was a new breed of media tech hybrid. By combining cutting-edge technology with world-class content creation, Netflix had positioned itself at the intersection of two massive industries. Its market cap skyrocketed, and its inclusion in the prestigious S&P 500 in 2010 cemented its status as a financial heavyweight. One of its lesser-known but most powerful advantages is its mastery of data. While traditional studios relied on intuition focus groups, Netflix used sophisticated algorithms and mountains of viewer data to make its decisions. In many ways, the company knew what its audience wanted to watch even before they did. This data-driven approach allowed Netflix to minimize risks and maximize returns, giving it a significant edge over its old-school competitors. For example, the decision to invest $100 million in House of Cards wasn't a blind gamble. Their analytics showed that a significant number of their subscribers loved political dramas. Combining these three elements seemed like a recipe for success, and the data proved correct. This analytical approach has since become a cornerstone of Netflix's strategy, influencing everything from content acquisition to personalized marketing. The rise of Netflix sent shockwaves through the entire entertainment industry. Cable TV subscriptions have plummeted as millions of consumers cut the cord in favor of more flexible streaming services. In response, legacy studios like Disney, Warner Bros., and NBC Universal have all launched their own streaming platforms. This Netflix effect extends far beyond just streaming, has completely reshaped how films and TV shows are produced and financed. It has brought diverse stories from countries like Spain, South Korea, and Germany to a global audience who might never have encountered them otherwise. Think of shows like Money Heist or Squid Game. But despite its incredible success, Netflix's journey on the stock market has been a roller coaster, and the company's aggressive spending on content has raised persistent questions about its long-term financial sustainability. In early 2022, Netflix faced one of its biggest challenges yet when it reported a loss of subscribers for the first time in over a decade. The news sent its stock tumbling, wiping out billions in market value literally overnight. The king, it seemed, was vulnerable, but Netflix proved its resilience, including a lower-priced ad-supported subscription tier to attract more budget-conscious consumers. It also doubled down on its expansion into international markets, where the potential for growth remains significant. The Netflix journey offers incredibly valuable lessons for any investor. Reed Hastings' willingness to bet the entire company on streaming before the market was ready was a high-risk, high-reward move that paid off spectacularly. Netflix's ability to pivot from DVDs to streaming, and then from a content distributor to a content creator. Finally, Netflix's story is a powerful testament to the force of innovation. By leveraging technology and data in ways no one else was, the company has consistently stayed ahead of the curve, setting trends rather than just following them. As Netflix faces ever-increasing competition from platforms like Disney+, Amazon Prime Video, and HBO Max, the big question remains: can it maintain its dominance? The company's current focus on expanding into international markets, mobile gaming, and even interactive content suggests that it's not resting on its laurels. For Wall Street, Netflix represents more than just a successful company. It's a living case study in disruption. Its journey from a small IPO to global industry dominance has shown that bold ideas combined with flawless strategic execution can create immense world-changing value. The Netflix story serves as both an inspiration and a challenge. What is the next big idea that will reshape industries and redefine markets? The Netflix effect is more than a media phenomenon. It's a blueprint for transformation. It's a story of how a small company with a big idea can change the world. Netflix's journey is a powerful reminder that the future belongs to those who dare to innovate. Take a moment to think about the disruptive forces at play. What's the next big thing waiting to emerge? And more importantly, are we ready to recognize and embrace it when it comes? Thanks for watching. Be sure to like this video and subscribe to the channel for more deep dives into the companies that are shaping our world.